Today we're going to talk about how to pass a prop firm challenge and how to grow a small account. Love this class. We host this webinar once a month, every last Wednesday of the month. I got a couple of things prepared today that I think you guys will really like. I've prepared kind of a cool a thing we haven't done before. We're actually going to look at a prop firm challenge that I probably wouldn't want you guys to join. Okay. So I'll give you some tips and tricks on how to identify prop firm challenges that really are not that good. Okay. And that don't give you rules that are advantageous. Most calls when we do this class each month, we talk about the prop firms that are pretty good, and we've done plenty and if you have questions on prop firms that you'd like to review, I'd be more than happy to review several. And we've got prop firms that we've looked at in the past that are pretty good, that I like. And so you can join up with those ones if you want. But yeah, today we'll do a kind of an interesting thing. We'll go into the details because there's a lot of small print rules that I feel like a lot of traders don't recognize before they get themselves into a prop firm challenge. So I think today will be a really good opportunity and webinar where we can go through that. So that'll be really good. We'll also give you some, towards the end of the call, I'll give you some tips and tricks on how to grow a small account and how I've saved money to grow small accounts and how you can do the same thing. All right, guys, well, let's go ahead and get started. Before we jump into this, as always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, let's go ahead and jump into this. Actually, I'm going to stay on the slideshow because I've prepared couple of things here today. First of all, let's just kind of go over. We don't need to spend a lot of time here, but I do want to go over um, just some general concepts about prop firms, what they offer and what they do, and then we'll get into what I've prepared specifically for this call. So a lot of you guys already know this, but so I won't spend a ton of time here. But let's just generally talk about what prop firms are. So prop firms is short for proprietary trading firms, and these are companies that fill the problem that we had in the market. One of the biggest challenges I hear from people who I talk to every day, people who are thinking about trading or about to get into trading, is they say, well, Steve, even if I learned the skill of trading, even if I was good at it, I wouldn't even be able to make money because I don't even have funds to be able to trade with in the first place to be able to make anything substantial. So that's a big challenge because a lot of times when you recognize that, it's like, man, guess I won't even start, right? Won't even try to learn because that's a big challenge. Thing is, though, prop firms recognize that and they said, you know what? I think that's a problem in the industry. Let's see if we can solve that problem. So prop firms came out and said, hey, for a small one-time fee, you can take a test. You can take a challenge. And if you pass the challenge, we'll give you a larger amount of capital. Typically these accounts are anywhere between as low as $5,000 to as high as $1 million. I'd say the most common amount that people apply for is anywhere between 25,000 and up to 200K. And I think the reason why people apply for accounts in that kind of range is because usually that's the number that people need in order to start making a living trading, right? If you have access to 100 grand, or excuse me, a 200 grand of trading capital, you can likely, if you're a good trader or if you have a strategy that's working, you can likely become a full-time trader with that kind of capital. It's kind of harder to do. And in fact, I would say impossible with a smaller amount like $1,000 or 5,000. Can you still make money with that? Of course. We all had to start there at some point, right? A lot of us. In fact, I'm going to give you some tips and tricks on how you can start with smaller amounts and how you can bolster that up into a sizable trading account to the point where you finally have some money to work with, right? But a lot of times it's really nice if you already have a system that works and you trust it and you believe in it and you're disciplined. It's nice to be able to just jump into those bigger challenges. So that's what prop firms are, but they have rules, right? And these challenges are difficult, right? So most people, let's be honest, most people don't pass these challenges. I'll be honest too. I've failed more challenges than I've passed. The cool thing is though, is that once you pass a challenge, you can actually make more once you've passed. Um, than, if you failed a challenge in the past, you can make up all those past failed challenges with the profits that you make from just one funded account. So yeah, they're difficult. The first two funding challenges that I ever did, I failed, and both of them were 200K challenges. And going into those challenges, I had a bona fide strategy. I had my trading rules. I printed them off. I concluded to follow them. Back then, when I first started challenges, though, it was landscape was different. I think one of the reasons I failed is because they had time limits. So I had to pass within 30 days. And if I didn't pass within 30 days, I would have failed the challenge. And so I kind of got myself into trouble initially when I first started doing it. Now prop firms don't have time limits. You have unlimited time to pass your challenge, which is very, very helpful. That's going to definitely help a lot of people having unlimited time to pass your challenge that, you're going to have fewer issues in passing. Now, there's definitely issues that come up, but at least it's not going to be a timing issue, right? Okay, so these prop firms, the most general rules that they require is you've got to make a 10% return in your account typically. Now, that's if you're going to do a one phase or two phase challenge. I highly suggest um, um, I highly suggest that if you ever try out for a prop firm challenge, I'm a big fan of the two phase challenge more than I am of the one phase challenge. We're going to actually dive into that a little bit today when we talk about the $1 million account challenge. We're just about to get to that slide. I think it's the next slide or in two slides or something like that. But that's a one phase challenge. And I'm not a big fan of those one phasers. So I like the two phase. The reason why I like the two phase challenge is because usually they're less expensive, first of all. And number two, they they give you better and more advantageous rules. And so it does require more trading, and you have to prove your concept of trading. You have to prove your ability to trade a little bit more with the two-phase challenge. But I think that's a better trade-off than spending more money. So I'd rather have you prove your trading strategy and prove your ability more than I would have you go out and spend more money on a challenge. That's my philosophy with it. I know some people they want to do that one phase challenge. There's a lot of marketing pushes for people to purchase one phase challenges, but they are often not in your best interest, right? So that's one of the reasons why I don't really like to push people towards the one phase challenge, because the one phase challenges, um, like I said, don't typically have the best rules in mind for you. So you want to, like I said, we're gonna talk about those two phases, but generally two phase challenges, they come with these rules right here, as you can see. Typically, a general prop from challenge is going to give you a 10% max drawdown. You're going to get a 5% daily drawdown. You get up to five. You have to trade typically 5 days total. That doesn't mean you have to, or you have 5 days to pass. What minimum trading days means is that you just have to take trades for at least 5 days. Most people will take, a couple of months to pass their prop firm challenge, maybe more. Depends on the trader. Could be less depending on the trader. So that's usually not a rule people really care too much about. Um, but it is a rule nonetheless. Okay. Then you got to make 10% of your account in phase one, and you got to make 5% in phase two. And you got to do all of that without breaking any of these rules. So you have to, make the 10% and the 5% in phase two. And meanwhile, while you're accomplishing that, you can't dip below the 5% daily or the 10% total. And if you can do that by the end of phase two, you become a funded trader. Okay, so that is basically the stereotypical two-phase prop firm challenge out there. So it's amazing. Like we've had, especially in the last 2 months with the overnight trading strategy, we've had about a dozen or so traders just get funded with two-phase challenges with the overnight strategy, which is pretty remarkable. So I'm super excited, super excited about that. Um, I've even passed a couple of prop firm challenges just in the last month using the overnight trading strategy, which has been pretty awesome. And I'm excited to pass some more and keep seeing the success there. I actually think that strategy is quite tuned well for prop firms. Um, so long as you stay diligent with it. And I think if you use the 1.25 multiplier, again, this is kind of going off on the tangent or on the side here, but I think, yeah, if you tune into that 1.25 multiplier, you're pretty safe. It'll probably take you about 2 months to pass on that one. If you're doing the 1.5, might take you a little less time so long as you don't hit bust. Bust can set you backwards. I did hit bust on one of my prop firm accounts last week, and it put my account backwards about 6 or 7%. And so that was not fun, but it happens. I didn't lose the account, but it did set the account backwards. So anyway, let's move on. Okay, so and give me 1 second here, guys. It's that time of day where I got to close my blinds. 1 second. All right, here we go. Okay, cool. So this is the part I really wanted to get in. So this is different. Like this is a different type of slide. I've never done a slide like this before. And I felt the need to talk about this right here. So there's kind of a new push. I don't want to say it's brand new, but I've noticed a new marketing change in the prop firm industry to push these $1 million accounts at somewhat of a very, well, not just somewhat, it's a very discounted price. And so it's a way for prop firms to bring in more money by marketing to traders who would like a $1 million account. Who wouldn't? I would love a $1 million account. I don't have a $1 million account. I have a bunch of 200K accounts. I have several 100Ks. I've got a couple of 50K prop firm accounts, but I don't have a $1 million account. I don't even have a 500K account. And to some people, that's surprising. Which, by the way, just a little my philosophy on this is I prefer having just smaller prop firm accounts at different companies. I'd rather have six 50K accounts at six different companies than like, three or two 200K accounts at one or two different companies. I'd rather more accounts because I can just set up a copy trader that will take all those trades for me on Copygram or some other place and have those trades copy trade rather than trying to trade all six of them individually, which sometimes I have to do that. Like because not every account trades the same strategy. And so sometimes I do have to take a lot of different trades each day in different accounts and I have to log into several. So it is a little bit of a process. To me, it's worth it though. It doesn't take a ton of my time each day, but yeah, it is something I have to kind of prepare to do.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Anyway, so $1 million account, that it's exciting because when you think about the numbers, like if you think about like, okay, if the overnight trading strategy has been yielding anywhere between a 5 and 10% return a month, or if you're using a lower multiplier and you're making anywhere between 3 and 7% a month, we'll say, on $1 million, that's exciting because if you're making even just 3% on a million, that's $30,000. If you make 7% in a month on a $1 million account, that's 70 grand. And so if your cut is 80 or 90%, that's a big old paycheck. I mean, for many people, that's a salary. Um, in just 1 month, like a year-long salary just done in a month, right? So yes, it's exciting, right? But I do want to talk about this push for these $1 million challenges. Okay, so there's a couple of companies out there that are pushing this. Funding Traders has a $1 million challenge, and this company has a $1 million challenge. And before Surge Trader went out of business, they had a $1 million challenge, and a lot of companies offer scaling up plans to get to a million, even though they don't have just a $1 million account. So this is what we're talking about here is just like a $1 million account where it's just a one-time, you pay a one-time fee and you get your $1 million. So this company right here, these guys, this is called $1 million a challenge, $1 million challenge.com. This is their website. And they're obviously hitting you up pretty quickly with a lot of marketing right up front here. There's first thing they say is limited spots, right? Basically trying to create scarcity. I guarantee they have unlimited spots. Okay. But they say they have limited spots, right? Unlimited potential, right? $1 million trading account for only $597 plus a free retry, which is awesome. So love free retries. The thing is, anyway, I have a thing on retries too that I'll have to tell you about. But 597. You guys do you realize how cheap that is for a prop firm account? 597. Like that's insane. Like most two-phase 200K accounts, like with Funded Trading Plus or Top Tier Trader, if you went with one of those companies, your two-phase challenge is going to be like $900 with a coupon, maybe 1,000 without a coupon type of thing. Top tier could be a little more expensive, maybe 1,100. Okay, so that's a 200K account. So it's nearly double, right? So they're saying that an account 5 times bigger is half the price. Um, so kind of crazy. So that right there, I hope at least enough people look at that and are like, hey, that's an issue, right? Like what's the catch? Okay, because there is a catch here. And I want to just kind of show you the catch. And I'm really not trying to pick out this company. I mean, the thing is, I've never done business with these guys, so I hate to like pick them out. But the thing is, I will at least show you their rules because that is information that they share and ought to share. And so let's go over those rules and compare and contrast. I think we're allowed to at least do that, right? So I'm not a big fan of I'm just not the type of person to be like, I hate those guys. Like I just don't talk that way. I'm just trying to help people, right? And so for me, this is a way of helping just to kind of share information and how I would approach a prop firm challenge and who I would go with and who I wouldn't go with so that you guys can make a more educated decision. Maybe this is a good challenge for you specifically, but I'm going to explain at least why for me, this would not be a good challenge, right? So anyway, right off the bat, it's kind of amazing what they're offering. But then when you look at their rules, which I have right here, it kind of becomes a little more eye-opening. And I actually have written down some of their main rules. So let's kind of go over this right here. So let's compare and contrast these rules versus like a standard prop firm challenge. So the first of all, These are hidden rules, by the way. These are not on their front page. You have to go to their terms and conditions to find this. Okay. So I would highly suggest, by the way, if you're thinking about buying, especially like a larger prop firm challenge, like 100K or 200K, where you have to invest a little bit more money, like 100 grand, or not 100 grand, but if you're trying to get 100 grand or 200 grand, and it's going to cost you $500 or $1,000, I mean, I would probably put a little bit more time into looking into it, just because that is a little bit more money, right? And not only it's really, I don't even know if it's about the money. It's like the time that you're going to spend to pass that challenge, right? Like I'd hate to start a challenge and have my time wasted finding out that they're not happy with my strategy, even if I passed. I mean, that's devastating to find out that you worked all that time. And it's happened before. I've had that happen to me a few times. So yeah, not fun. So let's go over these rules. So these are hidden rules. You can find them in their terms of service. And I would recommend that if you're ever going through a prop firm challenge, even with a mainstream, prop firm company, go look at their terms of service because they have to provide everything because that's the contract that you're signing, right? So at the end of the day, anything on their site is like good info. But if you want to get all the legal stuff, like find out what you're actually up against, go into their site's terms of service because that's what you're actually agreeing to. Because if there was an issue, that's what you would use as they would use that against you and you would use that against them. So that's why I say go to the very thing that is binding between you and them, which is in terms of service, right? Okay, so if you look at this, all trades have to be closed every day by 4:30 Eastern. Now, why is that like an interesting rule? Well, because like nobody does that. Think about it. Everybody I know of allows you to hold trades like overnight. A lot of companies will let you hold trades over the weekend, but at least for a whole week, you could hold a trade in theory. So this right here is already an issue. So you couldn't do like our price action signals, throw those out the window. You couldn't even do those with an account with a prop firm like this. Okay. Um, this is probably the worst part. And this is why I have a big problem with one phase challenges. This isn't just unique to the $1 million challenge. Most one phase challenges have the same rule, which is a 3% daily drawdown and a 6% max drawdown. I just want to highlight how unbelievably tight that is. 3% is really not a lot of risk. I mean, it is, but if you're taking multiple trades in a day, you need to be able to, have that. And even just losing 1% or 2% feels sketchy because now you're getting pretty close to that daily. You also only have 6% max drawdown to work with total. And so if you risk 1% per trade and you happen to have a losing streak of 3 or 4 trades, well, now you're getting really close to your end of the line right there, just on just a 3 or 4 trade losing streak, which we all have. We all have losing streaks that can last that long, sometimes longer. We also have winning streaks that last longer than that too. But that's just the way things work with every strategy. You're going to have your winning streaks that last a long time. You're going to have your losing streaks that last a while. Um, I wish I wish we could have, sometimes more wins in between, but, it's just how the way the market works. Sometimes you do everything right, but, and you could have a winning streak that goes on. You could have a losing streak that goes on. So already that's a rule that I would get a little bit nervous about. The only way you could skirt that rule is if you applied for the $1 million, but then instead of treating it as a $1 million account, a suggestion would be to trade it like a 500K account. So you have access to a million, but you would treat it like 500, or maybe you would treat it like a 200K account. But to me, that defeats the purpose of having $1 million in the first place. Why have $1 million if you can't put it to work? You see what I'm saying? Right. And so you might as well just apply for the 200K account. You might as well apply for the 100K account if you can't even put the $1 million to work. Right. So right off the bat, that's probably the biggest thing that I would want you guys to look at, especially when you're looking at one phase challenges or these $1 million challenges, because they don't often tell you this on the front page. They don't tell you that that's the, you know, what the rules you have to abide by. But it gets worse, guys. So let's continue here. So step one challenge: make 10% profits without violating any of the rules. Okay, that's straightforward so far. 90% of profit is yours after you're funded. Same rules apply on the funded account. Um, okay, there is a 6% max drawdown from initial balance. Okay, we already talked about that. 3% daily limit. Start each trading day with your equity balance cannot drop more than 3%. Okay, all trades must be closed at the end of the day. We already talked about that. Okay, this right here. So lot size limits. Um, so this is interesting because if you guys recall, like with the overnight trading strategy, we use a matrix multiplier, right? And so not every day we're using the same lot size. Like tomorrow we might have a increased contract size than how we were trading yesterday. And then maybe in 2 days, we go back down to our default. Depends on if we get a win tonight. If we get a pretty nice win with the overnight strategy, then we go back to the default. Okay. So that means that we're going to have to use leverage. We're going to have to open up some big trades sometimes. And so if you have $1 million account right here, they're capping you at 25 lots. Um, just to put that into perspective, I don't even know the numbers. I have an idea though. Let's pull this up. Here's a calculator. Most prop firm accounts give you 1 to 100 leverage. That's pretty much the average, about 1 to 100. And so if you have a 100K account and you multiply that by 100, that would be 10 million. So if you divide that by 100,000, which puts you at 100. So you get well, that's just the opposite of what we just did. So you get 100 contracts. So you could trade with most prop firms 100 contracts max with $100,000. So if you're given $1 million account and they're only giving you 25 max contracts, then what's the leverage you're actually getting, right? Because if you think about 25 contracts times 100,000, that's 2.5 million. So the leverage on $1 million account. So if you divide that by a million, um, what's the actual? Because if this were truly honest, like $1 million account times 100, if it were like all the other prop firms, would give you $100 million. Divide that by 100,000, that would be 1,000 contracts. Oh, holy smokes! So, yeah, basically these guys are giving you um 1 to 2.5 leverage. Holy smokes! So, if you're getting if the max is 25 lots open at the same time, which is the equivalent of $2.5 million in leverage, divide that by just a million. Yeah, it's 2.5. Okay. So, like, okay, I hope you guys can see where I'm going with this. Is basically they're giving you 1 to 2.5. Like, nobody would ever sign up for that, right? Like, if you think about it, like, if they were to offer you the $1 million as an actual challenge that, like a standard 100K or 200K challenge, you would never do that because um, you're capped out at 25 lots. Now, 25 lots is a big trade. Like for many people, they're never ever going to take a trade with 25 contracts. Now, that might be an appropriate lot size for a 200K account, 25 lots, or maybe a 100K account if you're taking a big old trade. So 25 lots on $1 million account is pretty standard. Like that's going to be a standard trade. I mean, if you ever need to go bigger than that, which you might have to, you're not going to be able to, right? Like let's put it this way. Let's do a quick little thing, guys. Let's go to the lot size calculator. Okay, let's go onto the website and let's pretend this is $1 million account. Let's say that we're taking the overnight trading strategy. We're trading this. It's tonight. We're setting it up, right? So let's say we, have a, like last night, a 14 pip stop loss. And let's pretend that this is $1 million account. See, did I get all my zeros right? Yeah, that's $1 million. Leave the pip size at the default right there, 0.00001. And then let's say the risk is, tonight, I think tonight in the sequence multiplier with the overnight strategy, we're going to be doing 0.38 tonight because I lost last night. So I'm going to the next level in the sequence, which would be 0.38. Now I click calculate. Um, already just on, then look at this. The $1 million account would call for 27 contracts just on step two of the multiplier. Okay. So you wouldn't even be able to successfully trade the overnight trading strategy because they cap you at 25 lots, which you wouldn't even have enough to be able to take the trade, right? Um, so the only way you'd be able to trade the $1 million account is if you treated it like a smaller account. Maybe you have to treat it like a $100,000 account, which honestly, that's probably what you should have to do. And now that would call for just 2.7 contracts, right? 2.7 contracts is a lot more reasonable for a 100K account. But 10 times that at 27 on a $1 million account, you just can't do that. That just wouldn't let you, right? Wouldn't let you take that trade. So that's honestly probably that's actually the biggest challenge you'll probably run into with these types of accounts. So what a lot of these companies do is I've done this before, is if you breach that one, they won't even let you take the trade if their systems are set up to do that. I had one prop firm where I took a trade that was too big. They allowed me to take the trade, but what ended up happening is later on, because that trade won, they disputed it and said that that didn't get to count towards my equity or my balance because it exceeded the lot size that was permitted in that trading account. So either one, like I said, their technology just won't even allow you to take that trade, or two, um, they'll dispute it later on the road. You might be thinking that you're doing great, but then they'll come along later saying, "Hey, that doesn't actually count. You don't get to collect that profit. You don't pass go straight to jail." Right? Not a fun feeling, right? Okay, so that's basically the big thing I wanted to share here. And they do highlight it. Like when you get into their terms and conditions, they bold it. So nice. So the thing is, like, I wouldn't say they're doing anything wrong because they are telling you what they're doing. The problem is that a lot of us won't go in here and look up these rules. And maybe we don't know that that matters. Like a lot of us might look at that and say 25 lots, that's plenty of leverage. That's a lot of leverage. I will never take a trade that big. Well, the reality is on $1 million account, that's just business as usual. 25 lots is totally normal. It's in fact maybe even small for $1 million account. On $1 million account, you could be looking at 50 contracts, 100 contracts per trade with $1 million. Okay. Um, yeah, and so this wouldn't even let you do that. So it's kind of like looking at $1 million through like the shopping glass. You're like, wow, that looks awesome. I wish I could have that. And it's just an illusion what they're offering. They're just adding another zero on the account. So you're like, oh, $1 million, that would be great. I could change my life with $1 million. But that million doesn't really get you what you're looking for at the end of the day. Okay. Um, okay. So any questions about this? Because we're going to move on to the next part of the call, unless you guys have other questions. So like I said, I'm not trying to either advocate or steer you away necessarily. Um, although it may seem that way, because like I said, I will say I would not personally do a challenge like this because those rules would not work for my strategies. Um, for nearly all the strategies I trade, they just wouldn't work. And so I personally wouldn't trade that because I think ultimately I'd get frustrated. I'd ultimately fail. And I think, and I don't want to speak on their behalf, but I think I can probably understand where they're coming from. These guys are really just trying to make a quick buck. And so, I mean, that's kind of what this offer is all about. And so, there's nothing wrong with making money, but I just don't think that this, for me, would be the most honest thing to sign up for, if I can say that. So, that's just how I would go about this. So that's why I focus on other prop firms that I've enjoyed. I've liked Funded Trading Plus. I've liked Top Tier, because I feel like those prop firms, although they're also out to make money too, and collect prop firm fees, I do know, including myself, people who have had payouts from those companies who have successfully gotten funded with our strategies, and who have gotten to the point of having the success that they're looking for. So that's why I go with those types of companies, the two-phase challenges specifically. All right, guys. So let's move on to the next part. I don't see any other questions. Let's see. Jim says, if you have time today, could you give an opinion on City Traders Emporium, or maybe next time? Yeah, totally. Um, I'm not familiar with City Traders Emporium. Let me actually look them up real quick. City Traders Emporium. And let me see if I can find these guys. This looks like it's them right here. Oh, cool site. Like first glance was like, oh, that's a cool site. Um, yeah, never heard of these guys. I'll have to take a look. I'll give the link to everybody in the chat box for those that want to take a look at this website. Um, cool. Yeah, I'll get this added to the next slide, or the next prop firm webinar next month. But yeah, it looks like they offer a two-step and a one-step challenge. Their one step is called the assessment phase. Their two step is called the verification phase. And it looks like funding is CTI Trader. So City Traders Imperium Trader. That's cool. And it looks like, from just the general look, it looks pretty much standard. 10% drawdown, absolute. Oh, I love that. That's an absolute drawdown. That's cool. 5% daily. Awesome. Unlimited time. Yeah, so far from first glance, we're gonna move on, but first glance, it looks like your standard challenge that I would sign up for. Like I said, I would want to look at some of their other, rules. One of the ways you can find out too, guys, if you can go to their terms and conditions right here. So this is just a yes, hop into this is where I would spend your time, guys, if you're looking at prop firms. They know nobody reads this, but they have to fill this out, right? Like every company who does anything that signs contracts, um, including myself, like everybody has something like this. So, and you can come in here into stuff like this and do a control F and search for terms that you're looking for. If you're looking for things about news trading, or if you're looking for things about leverage, just do a control F in terms and conditions and find out really what they're all about in here. Now, a lot of this will be very strong language because that's just the lawyer lingo. But I mean, a lot of that's okay so long as none of it would be rules that are out of the ordinary, right? Like, like for example, having to close within 1 day, like you can't swing trade, or having limits on lot sizing that's out of the ordinary. Because most companies do have limits on how big your lot sizes can be. Like for example, with FTMO, they won't let me take a trade that's bigger than 50 contracts, but that's on my 50K account that I have with FTMO. And so they've been okay. Like I don't even think I can trade 50 contracts. Plus, I'd never want to trade 50 contracts on 50K. That account's too small to trade 50 contracts. So I'm okay. Um, so I'm okay with that rule. I wouldn't be okay with that rule on $1 million account, right? So you just have to kind of do your due diligence. Hop into terms and conditions, guys. That's where I'd get your info after you've kind of gone through their homepage. Go to the backside, you know. Um, and anyway, so I think that's a good thing to do. Okay, guys, just I want to give some real quick tips. So prop firms aren't for everybody, right? Um, when I first started trading, I didn't go through a prop firm. I got funded with my own money. I started off when I was in school, I put $500 into an account, and every week I put 20 or $50 into it or something like that. I put $50 a week into the account. And so within 10 weeks, I got the account to over $1,000. So you have the interest or the dividends you get from making money trading, plus, the money that you add into it, right? So when you're growing a small account, it has to be that way. So a lot of people are like, well, Steve, I only have $500 right now, or I only have $1,000 to work with. That's okay. That's where I started too. You just have to kind of get started, and you have to learn to use a lot size calculator. And a lot of the times you're just taking micro contract trades. I mean, a lot of the times when I took trades when I first started, I was just making $10 a trade, $20 a trade, 30, maybe on a really good trade, I'd make $50. Sometimes you just have to start there, and you as you build your account up, you can also amplify that growth with your own contributions. So that would be contributions from just the money you make at your job, or from whatever incomes you have, right? And so that's what I did, is I would, start with the initial lump sum, whether that was like $500, $1,000. If you have more, like 5,000, great. You go ahead and start with what you have. Then from there, you go in and you just get on a fixed schedule. So I would suggest, this is what I've done to automate my savings. You guys also know I'm doing the exact same thing, this dollar cost averaging concept with cryptocurrencies. So every single day, I go out and buy a couple $100 of crypto. Just every day, my account just auto drafts or auto withdraws money into the crypto world. Because right now, I believe I'm not necessarily recommending this, but for me, I'm trying to buy into crypto right now because I believe that we're entering a bull run in the crypto space that will last into the end of 2025. So because I have that, um, it is a belief, and it's a strong one I have. I believe in it enough that I'm going to put money where my mouth is, and so that's why I've been doing. I personally, this is just my feelings, and this is a little bit off on the side, but it's the same concept. So hear me out. Like, I'm buying crypto, and I have until like November or December to get my bag full of crypto. And then after that, I probably won't aggressively buy crypto anymore, because I think we'll be well into the bull run by the end of the year. And I don't want to be adding too much into it as the market's already headed up. So next year, I'll actually be dollar cost averaging my exit. And so dollar cost averaging, for those that don't know what this is basically where you um, find an investment you believe in, and you contribute to it with it's two things: fixed time and fixed amount. So every week, every day, every month, you put in a fixed amount of money, right? So with cryptocurrencies, I put in a fixed amount daily. It's pretty aggressive. Um, with like a 401k, you might be doing this, or you have done this, maybe throughout your life. Monthly or biweekly, you contribute into a pension or 401k, or however that works, right? Um, and the idea with dollar cost averaging is that you're buying at all the different prices. Some months you're buying at low prices, sometimes you're buying at the middle prices, sometimes you're buying the high prices, but you don't really know. You just believe in that whatever it is that you're buying will go up in value over a long period of time. So the same thing applies with trading accounts, okay? So if you believe in your strategy, if you believe that what you're doing works, even if you're just making, you know, $10 a week, 20, $30 a week with a smaller account, that's fantastic. It's great. That's awesome. Like, you should pat yourself on the back for doing that. Like, make your success yours. Like, you don't need to compare yourself to me. You don't need to compare yourself to other people. And just by the way, so you know, when you level up with trading, there's always somebody above you. I've figured that out. Like, every time I've leveled up, I've found there's people above me. Every time I level up to the next level, thinking I've made it, nope, there's somebody above me. So like, the thing is, if you make your success based off of like the people around you as you grow your small account, you probably won't enjoy it. So just take your small wins as they come and enjoy your success and how it happens. And a lot of the really successful people that I've seen with trading toiled for years. So a lot of the times, like it looks like this, like your first 5 years, you're just kind of toiling with small accounts and you're just trying to grow those small accounts. And those small accounts don't really amount to a ton. But then the next 5 years, you like get 90% more than what you made the previous 5 years. So it's kind of crazy how that growth happens. So really you're just kind of getting into the process of what it's like to grow in the beginning. That's what that looks like. So what do you do to make that happen? So I've listed several things. I won't name them all, but you can see my bullet points there. These are things that I have done when I was really small and by the way, I still do. Okay, I'm definitely am doing a lot better now, but a lot of these things I still take advantage of. You guys already know I like to cook my steaks. I say that practically every day. I like to cook, grill ribeye steaks. I still try to get the best deals I can at the store. I already know the stores that have the best ribeyes. I know the stores that have like the best deals and when they have deals, and I try to go out and get them when they're on deal. Um, so like I don't just be like, oh, that's full price. It doesn't matter to me. Like, no, I still try to get deals, right? So there's nothing wrong with like doing living that kind of lifestyle. I think sometimes people think, well, um, the moment I don't have to worry about what I buy, then I'll be happy or something. No, don't think that way. A lot of the wealthy people I know still do this. Like I have a friend, he's really wealthy. One time he asked me to go buy pizza for a group and he gave me his credit card. And, this was several years ago. And I just said, great, I'll go get, I overestimated the amount that we needed. So I bought too many pizzas. And I noticed he was a little bit like disappointed, like, oh, we bought an extra pizza. And I thought, well, no big deal. This guy's rich. Right? It's no big deal. What's an extra pizza? No, and that's the thing. Like, no, like wealthy people, they definitely watch their money. Like they know where it's going. They try to get the best deals they can. And I think that's one of the reasons why they got where they were. So I wouldn't underestimate the power of cutting expenses in your life. One of the ways you can stick it to all these people that have been raising prices over the last couple of years is to shop around, is to go out there and find the best deals that you can. It's all about learning how to live with less, right? And then you take that extra money that you're now left with and you put that towards your trading account and then you grow it from there. But one caution though is I wouldn't just put money into a trading account unless you are actually trading successfully and you have your written rules and you follow them. So just one little piece of advice: if you're about to go out and open up a small trading account, do it if you know that you're going to stay consistent. Like if you're trading the overnight strategy, if you're trading price action trades or scanner trades, I don't care what it is that you do, so long as you stay consistent with what you do. I don't want to see people, switching, because I've done that. I've done that so many times where, you have like a losing week or something, and then you want to switch. Like, let me give you another example. So I trade stocks in the morning, which by the way, we might be doing, I think I'm going to add a couple of webinars a week where we do stock trading. I'd be curious to find out if anybody would be interested in that. So I trade stocks alone, and I'm considering doing a call a couple times a week where you guys can watch me trade stocks. But last week I had a really good week trading stocks. I did really, really well. Just caught a lot of really good moves, like found a lot of gappers in the morning, just stocks that went up during pre-market, and then I caught them when the market opened. Did really well last week. Then this week, yesterday was a loss, and today I lost a little bit, not a ton, but it was still a loss this morning. And so sometimes, I haven't done anything different. Like I'm using my same scanner that I use for stocks. I'm using the same, like nothing's changed. I'm doing the same thing over and over and over again. And so I think sometimes it's easy because I still feel this and I have to remind myself. Like I thought about like maybe I should change something and then I realized no, why would I change? Like like all the profits I made last week, even though I've given some of them back, I still have more profits from those than losses. And so I realized, I shouldn't change just because I had a couple of losses, or you know, just because I lost this week so far doesn't mean I should give up on trading this week. There's still going to be some really good days tomorrow, Thursday, and Friday. And if I give up now, I might not make those, right? So, so yeah. So anyway, I just want to say like that kind of stuff is like it's everywhere. It's with every strategy. It's in every market, and we have to overcome that. Okay. So, yep. That's my last really big piece of advice there is if you're going to open up a small account, first know that you're successful. How do you do that? Trade in a demo. Trade in a demo, trade in a demo, trade in a demo. There's nothing wrong with trading a demo. By the way, I still trade in a demo if I'm having a rough day, right? Like sometimes it's good to just throw in the towel before you go off script. I'd rather have you go to your demo off script than go off script on your prop firm account or on your live account. Okay. Sometimes it's good to blow off steam in a demo account. Sometimes I'll actually just, this is how I'll blow off steam, guys. Like sometimes I'll go on to a demo and I'll just like take trades, like boom, click, click, buy, 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 and just kind of get it out of me. I got to get it out of my system so that I don't go and do that in my real account, right? And then it kind of humbles you pretty quick. You're like, oh yeah, that style isn't going to work. I need to stay true to my risk management, true to my strategy, and you'll do just fine. Awesome. So Roger says, yes, you've been saying that. Yes, very interested. Cool. Yeah, no, yeah, I might start that up soon here. And it might just be a couple days a week. I don't know if we'll do it every single day, but just to kind of gauge some interest, we might start with just a class or two a week in the mornings. It would likely be like 15 minutes before the market opens so I can give commentary on which stocks I'm buying for the day. And I'll show you my scanner and I'll show you like where I'm going to get in and stuff like that. Usually the trading I do in stocks is in the first hour of the market. So and then usually when I'm done with that, I head over to I switch gears and I go into Forex and I start, doing our live calls that we've done in Forex. So cool. That's good to know. Yeah, I think I might schedule that here soon. All right, guys. I think that's about it. I'm going to give us a 10-minute break. We're going to do COT report and scanner here in about 10 minutes. So give us a 10-minute break. And for those of you that want to join up, we'll give commentary on the scanner and COT data for the week. That will be in about 10 minutes. So, all right, guys. Thank you for coming. Have a fantastic rest of your evening, and we'll see you guys in the next webinar.